Hi everyone, welcome back to the Thinking Crypto channel. I have a very, very special guest with me, Michael Saylor, who's the co-founder and CEO of MicroStrategy. Michael, I'm super excited to speak to you. Thank you for joining us today.
Thanks for having me, Tony.
Before we get into Bitcoin, there's a lot to go through there. I want to get a quick rundown on your background. Where did you grow up? Where did you go to school?
I grew up in an Air Force family. And so I grew up on military bases all around the world. Japan, New Zealand, Colorado, Nebraska, Florida. Went to high school in Fairborn, Ohio, just outside of Dayton, birthplace of aviation. I lived on Wright-Patterson Air Force Base. And so after I graduated from high school, I went to MIT. So I spent 4 years in Cambridge, Massachusetts. So that's where I was.
Got it. And what made you decide to start MicroStrategy? How did that come about?
You know, it was kind of unintentional. I wanted to get a PhD from MIT, and well, actually, what I really wanted to do is I wanted to be an astronaut. And my senior year, I was about to go off and fly jets and be an astronaut, and I was diagnosed with a benign heart murmur that kept me from flying aircraft. It was a mistake. 10 years later, they realized I didn't have it, but they thought I had it at the time. And so that lurched me in one direction. That took place with a few weeks to go before graduation. And I was going to go in the Air Force, and the Cold War was ending. The Air Force didn't have space for us, and they told us we'd have to wait 2 or 3 years to get called up to active duty. And so they gave us the option to go in the Air Force Reserve. So as I was graduating from college, I went from 10 years as a pilot in the Air Force to now you're not going in the Air Force. And I thought, well, I'll go to get a PhD, but I'd missed all the deadlines for financial aid. So I was catapulted into the working world at 22. I worked for about 2 years, and I thought, I'll work for a year, I'll apply for financial aid, I'll go back and get my PhD. And at the end of the second year, I had everything lined up, and I arranged the funding, and I resigned from my job. And I was building computer simulations for the DuPont Corporation. And they wanted me to finish the computer model because they were using it to acquire $1 billion in capital funding. And so they begged me to stay. I didn't want to stay. They offered me a raise. I didn't want a raise. They said, we'll give you anything you want. I said, well, I wanted to be a rock star when I was in high school. I wanted to be an astronaut when I was in college. Now I want to be a professor, get a PhD. And there's only one last thing on my list. And the last thing on the list is be CEO. So if you basically finance my company and let me start a company, then I'll stick around and do it. So I started MicroStrategy because my employer wanted me to finish a computer simulation. And I didn't think they would agree, but they agreed. And so they ended up giving me the first few $1 million worth of business. And I started the company, and I figured when it fails, I'll go back to college and get that PhD. And it never failed, so I'm still stuck here. So that's how MicroStrategy came to be.
So for the 5 people who don't know what MicroStrategy does and the services you provide, can you give us a quick overview?
Sure. We're an enterprise software company, so we sell software tools to about 5,000 large organizations like banks, big tech companies, government agencies, insurance companies, most of the retailers in the world. They use that software in order to create custom analytic applications. Like, I want to scan every item in every store every day and figure out whether my inventory is properly aligned with the demand I expect. Or I want to review every account in a bank and figure out where the credit risk is too high or where I might have some exposure. So they build these big, complicated custom applications on proprietary databases, and we sell them the tools and the servers necessary to run those applications and to deploy them throughout their enterprise. It's enterprise business intelligence. So that's what MicroStrategy does. We do business about 27 countries, most major cities in the world. And we're the largest publicly traded independent business intelligence company in the world.
Wow. And you've also have Saylor Foundation and Saylor Academy. Can you tell us about that initiative?
Yeah, well, the idea there is, why can't I get a mathematics degree for free? Because I can in theory learn mathematics online. Or why can't I get a computer science degree for free? Because all you need is a computer. So why is it going to cost me $200,000 to get a computer science degree? So I created the Saylor Academy in order to make available free college education. And the idea is just make college education free to everybody in the world forever. We've got engineering degrees, computer science degrees, math degrees, the like. We've educated about 800,000 students. We sign up 80,000 a quarter or more, and it's available to everybody on Earth. And you can go to saylor.org and you can start any particular course. We have all the lectures, all the textbooks are free.
Wow.
All the course notes are free. The tests are online. They're all certified with ACE, or we try to get college credit, and we have cross accreditations with a lot of universities. So you might take 2 or 3 or 4 semesters worth of classes and then transfer the credit and finish up somewhere. Or if you started somewhere and you didn't quite finish, you need 3 more classes to get your degree, you could take those online and get the degree. And the idea is make it quick and easy and cheap for anybody to learn.
So you're certainly ahead of the curve there, because we currently have, at least in the United States and possibly globally too, the student loan bubble and even just the education bubble, where it's more about money versus quality of service and education. Are you, is the foundation itself like trying to work with possible government officials to help make education more accessible to folks?
Yeah, we negotiate lots and lots of cross accreditations and partnerships with all sorts of universities and colleges everywhere in the world in order to help their students or give them an on-ramp to students, or if they have students that left and 10 years later they want to continue their education, they can. I think that we'll continue with that. We expect that the Saylor Academy will become the Saylor University in the next few years, and it'll be fully degree granting itself. Right now, we have to give the credits through other universities, and so
Sure.
I think working with various institutions and regulators is a good thing in order to make that education more available.
Sure. So, final item on your background, you have written a book called The Mobile Wave: How Mobile Intelligence Will Change Everything. Can you tell us about that? I've given it a read, and given I'm in the digital marketing space, it's been very relevant with the transition to mobile away from desktop. Can you give us a quick overview of that book, if you can?
Well, one of my degrees at MIT was the history of science. So I was always interested in scientific paradigm shifts. And there, up until that point, I mean, the first computer paradigm was mainframes, and people used software on mainframes in the back office. Then they went to mini computers and it moved into departments. And then when I got started in business, it was the PC, and all the software was running on desktops. And there were entirely new companies created, the spreadsheet companies, Microsoft for the PC. And then around 2000, the internet era hit. I mean, from 94 to 2000, and companies like eBay and Amazon, Yahoo, and Google became possible. That was the internet wave. Well, by 2009, with the iPhone 3, it became clear that iOS and Android were going to be a new paradigm for software, and that instead of deploying software just on the internet or on a PC, we would actually embed software into devices that we wore around and carried in our pockets and slept with. And that's the fifth wave of computing, what I call the mobile wave. And I was fascinated by it. And so I wrote this book about what happens when software moves from solid state to vapor state. What happens if software is all around us 24/7, 365? because people that used software before the mobile wave were white collar workers 2 hours a day in the office. And after the mobile wave, 3-year-olds would be using the software. 80-year-olds are using the software on the weekend in the evening. And so you had just a massive explosion in software to different constituencies, to different use cases. And now it became pretty clear that maybe software would replace money, or software would, you would have the future of Facebook mobile apps, and software would replace your telephone, and software would replace your camera. And the implications were, Amazon, Apple, Facebook, Google, the mega dominant digital networks. And so the mobile wave is all about what happens when things get dematerialized to software, and what are the implications for society and business and the way that we live.
Got it. I think you were certainly ahead of the curve on that one as well. And it seems, and we're going to segue now to Bitcoin, you are ahead of the curve with the monetary system and money being on the internet. When did you first learn and come across Bitcoin?
I probably heard about it in the 2012, 2013 timeframe. I famously tweeted about it. I thought it was like I thought maybe the regulators would shut it down. I didn't have a strong conviction on it. And then I kind of saw it flicker in the side of my eye for the next 7 or 8 years. But I was much more interested either in enterprise software, because it's my core business, or I was interested in what was going on with Amazon and Apple and Facebook, because I was a big investor in those, and I'd written the mobile wave, and I wasn't really thinking about the monetary network. I had very clear ideas about the dominance of Google as an information network, Facebook as a social network, Apple as a mobile network, and Amazon as a retail network. That was very clear to me. The monetary network, not so clear to me. That I didn't really become super interested in Bitcoin until March of 2020.
Wow. And what was the aha moment? Was there, you took some time to study it again? Was it like, okay, missed this last time?
I think that 2020 catalyzed tremendous change in a number of ways. I would say that 2020 is the year we went into the virtual wave. The mobile wave kicked off around 2010, and 10 years later, now we're going the virtual wave. And the virtual wave is epitomized by two massive changes. One, on the operational P&L side, is the explosion of Zoom and remote marketing, remote work, remote meetings, the explosion of YouTube as a way to get your message out, and the virtualization of sales, marketing, services, and communication. And, we saw Zoom go from 10 million users to 400 million users or something. You get to say a decade of progress, in a few weeks. In 12 weeks, you had 12 years of advance. And I think on the balance sheet side and on the money side, you saw the virtualization of gold. Yeah. You saw the virtualization of money. And the biggest manifestation of that is Bitcoin, and this idea that maybe it's time for a virtual digital monetary network. And so I think the catalyst was the pandemic and the lockdowns and the monetary response to the pandemic.
Sure.
Right? Because we just had an explosion in the monetary supply, the M2 money supply, and we had a K-shaped recovery, and that K-shaped recovery with a massively quick response and recovery in financial assets, but a very, very slow recovery of Main Street operations, caused a lot of people to stop and reconsider what they understood about money.
Sure.
And I would say 2020 ushered in the need for, and the explosion of a digital monetary network, which is what Bitcoin is.
Absolutely. So you personally hold Bitcoin, and you have Bitcoin and MicroStrategy's balance sheet. What occurred first? I'm assuming you putting Bitcoin into your personal portfolio, correct?
Yeah, I bought Bitcoin first, and then the company followed.
Now, in presenting that to the board and the folks there, was there pushback where they're like, Michael, what are you talking about? Are you crazy?
You know, I mean, if it was up to me, and it was just up to me, then we would have just went and bought $500 million worth of Bitcoin as fast as we could.
Sure.
But, you know, when you're a public company officer, you're a fiduciary, and you have to consider how you communicate this in a responsible fashion to all the outside shareholders and all the other constituents that are involved. So we went through pretty extensive deliberations, you know, and I explained to the board my thoughts. And obviously, I told them that I had acquired Bitcoin myself, so they need to understand my situation. Then after that, we considered as a team the regulatory issues, the financial issues, the risk issues, the other macroeconomic options, and that was 8 weeks, or I mean, a pretty decent amount of deliberation, a lot of one-on-one meetings, a lot of group meetings, a lot of research. Work that the accountants did, work that the lawyers did, work that the officers did, work that the board did. And after we went through all that work, we actually arrived at a measured strategy. And the strategy was, you know, multi-pronged. First, we announced to the entire marketplace that we're going to pursue a strategy of a combination of stock buybacks and asset investments in order to protect the balance sheet. So
Sure.
We made that known because we wanted everybody that was an existing shareholder to know that we had concerns about inflation, and we felt that we needed to do something. And the two obvious answers are either you invest all the treasury, we had $500 million, you either invest it in the stock, you buy all the stock back,
right,
or you invest it in an inflation hedge. And so there's no magic, there's no perfect answer. So we just concluded, well, we'll just do some of both. We split it down the middle. We said $250 million earmarked for stock buyback, $250 million earmarked for the inflation investment. After the market digested that, we moved forward with the strategy, and we said, okay, well, we thought about it, and we looked at every single asset. What we wanted was a safe haven treasury reserve asset that was going to appreciate faster than the rate of monetary expansion. So we looked at real estate, we looked at bonds, we looked at stocks. That none of those things work because they're all fiat instruments, and they're valued based on the cash flows. And if the money supply expands and debases, the cash flows are going to debase as well. So then we went to precious metals, gold and silver, and the truth is that was the best idea 100 years ago, but There's a better idea, which is digital gold. And digital gold is everything that you love about gold and everything you don't, and nothing that you hate about gold. So it's like it's pure pharmaceutical grade gold. And then we looked at every other crypto and we figured out what's the dominant network that's most likely to get the lion's share of support from other investors with similar interest to us. And the conclusion was Bitcoin, because of a commitment to proof of work. And if you decide what you want is a proof of work crypto network, well, then Bitcoin is the largest. And the issue is you got to pass over Ethereum, because Ethereum's transitioning from proof of work to proof of stake. And if you're going to actually put $1 billion on the network, you have to have 3 to 5 years of experience of a stable network. And so I asked me 5 years after Ethereum 2.0 comes out how I feel about it, and I'll have an opinion. But right now, I can't, as a fiduciary, bet on something that's about to go through a massive architectural change. So then you go to the next thing, which is Bitcoin Cash and Satoshi Vision, and they're all like 50, 60, 70 times smaller. Right. So really there wasn't another crypto that was looking like a store of value, proof of work, network that would be a treasury reserve. And that's why Bitcoin was the straightforward. And the next closest thing is gold. And gold just isn't that close a thing, right? So we went ahead and we allocated all $250 million to Bitcoin. And then we announced a tender offer to buy back $250 million worth of the stock at a premium. it was a Dutch auction. So the investors, if they didn't really approve of the Bitcoin strategy because it's new and maybe people just don't, right? We wanted to give them a respectful way to exit at a profit. So we tendered at a profit, and then we waited through the tender period. And at the end of the period, we had about $60 million tendered. So it could have been as much as 250, but it wasn't that much. Most of the shareholders liked the idea.
Right.
I mean, they stuck with us, and the stock traded above the tender offer price within a couple of days once people digested it. And so then we bought back the 60 million worth of stock, and we had 175 million extra, and we modified our treasury policy. We announced to the world that now we weren't going to be limited to 250 million. Once they digested that, we bought some more Bitcoin, and then we put that on the wire. So then we had 425 million worth of Bitcoin, and the stock traded up, and Bitcoin traded up, and eventually we had $1 billion worth of Bitcoin, and then we went to the market and we raised 650 million in debt, and we bought more Bitcoin, and the stock traded up and Bitcoin traded up again, and so now we have a lot of Bitcoin, and and the bondholders have their bond, and the stockholders have their stock, and everybody that didn't like the idea isn't a stockholder anymore, and the people that like the idea are. So we kind of rotated the shareholder base. And as you can see, it's a long-winded answer to your question, because you can't just do it in one move. You have to methodically move through a set of steps in order to make sure that there are no surprises along the way, because everyone deserves to be communicated to.
Absolutely. And I appreciate you taking us behind the curtain. It sounds like you did your due diligence there. You looked at different options, even outside of crypto. So that's really great. What do you think about the likes of a Citigroup, where they heard about the debt raise and using the respective funds towards Bitcoin, they lowered your, the anticipation of your stock price. What do you think about that? I'm sure you're getting challenge and pushback from a lot of mainstream folks. I've seen your other interviews on TV. How are you handling that? And you're going against the grain for as a publicly traded company.
I think that some people understand Bitcoin, and they understand the opportunity, and they understand and accept the risk, and they willingly invest in it. Either they buy Bitcoin, or they buy a fund, or they buy companies that are in the business, and they're happy with it. And as long as, in the public market, a publicly traded company can pursue a variety of strategies. The most important thing to do is to properly disclose what your strategy is, what the risks are, to the best of your knowledge. Right? To the best of our knowledge, we explain to everybody what we are. We're an enterprise software company selling business intelligence software everywhere in the world, and there's a whole set of risks that's long. They take 25 pages. And then we disclose our treasury strategy. If we were going to invest in S&P 500 indexes, or if we were going to invest in 30-year bonds, or if we were going to invest in real estate in Texas, or if we're going to hold it in cash, or we're going to hold it in euros. These are all just different disclosures and risks, and so we disclose that. And there are some people that like that. I mean, clearly there are people that bought the stock. I mean, today it trades at, right now it's like trading 4 times what it was when we started.
Right.
So there are people that bought it and they're happy with it. And then there are some people that would say, well, this is not what I signed up for. So it's important for us to let them know that if you don't want this, you shouldn't buy this stock, right?
Sure.
This is not your thing. And so I think some analysts don't want to cover Bitcoin, and it's their right. They can do what they like, right? I mean, so I don't have a comment on that decision, other than, there are some investors that are delighted that we did it, and there are other investors that sold back to us in the tender offer because they didn't want to be holding the stock. And I respect both those decisions. That's the right people make in the public market.
Sure. And that's great that you guys disclosed all of that. You were transparent and doing right by the shareholders. I would like to ask, how much Bitcoin do you personally own, and how much does MicroStrategy have on its balance sheet? I know you've done multiple accumulations, so I'm curious how much you have as far as a number.
I think I have 17,732 Bitcoin.
Got it.
Me personally, I hodl. That is mine. And then the company has something like 70,400. I put it on Twitter. About
Yeah.
70,000
Wow.
for the company.
And how did you personally and with the company execute the respective trades, and how are you custodying it to keep it secure?
You know, I can't tell you all my secrets, but I can say the way you would do it is you go through a due diligence process and you look at all of the institutional grade exchanges and custodians. And MicroStrategy is actually sponsoring a Bitcoin for Corporations Summit coming up February 3rd and February 4th. And we've actually got a 2-day course where we explain all of the nuances, all the things we think about with regard to acquisition, accounting, tax, due diligence, risk controls. And I've also got 10 different institutional grade Bitcoin vendors that have either Bitcoin funds or Bitcoin exchange services or brokerage services or Bitcoin custody services. And they all have strengths and weaknesses, and they have specialties. And the idea is everybody can go and look at those and decide for themselves. So I went through that due diligence process. The company went through a due diligence process. We picked vendors that we were comfortable with for the acquisition and for the custody, and that's who we work with.
Got it. So Bitcoin for corporations, you mentioned February 3rd and February 4th. So along those lines, since MicroStrategy made the move, have you had other CEOs calling up saying, "Hey, Michael, tell me about what you did"? Have other folks, publicly traded company folks approached you?
Yeah, I have people that talk to me, and they're always very interested. And I would say that I get a lot more inquiries now than I did 6 months ago. But
Yeah.
I mean, Bitcoin is becoming a very interesting topic, and so I think a lot of companies are interested in this. Private companies, public companies, high net worth individuals, and also institutional investors. And so I've had my fair share of conversations.
So you know I have to ask, Michael, the conversation with Elon on Twitter. How did the offline conversation go? Did you share your plan with him? Was he receptive? I know you probably can't say, well, yes, he did this, but as much as you can give us.
Everybody asks me this question. It's a very popular question. I wish I could help you with an answer to that question, but unfortunately, I cannot help. But
Well,
it is an interesting question.
I should say, okay, this is as far as I'll go. Did you have a conversation with him offline?
I wish I could help you with that question.
Okay.
I had a conversation with him online, and I'll
Okay.
tell you what I said, which I would say to everybody, which is I think that a company that's got a lot of cash would do well to convert some of that cash, if not a lot of that cash, if not all of that cash, to Bitcoin. Because if you have cash on your balance sheet, it's debasing at 10 to 15% a year. It's a liability. And over 10 years, you're going to lose 75% of your purchasing power. And on the other hand, if you flip it into Bitcoin, it's an accretive asset, and Bitcoin's been going up 200% a year. But if it was going up 20% a year, you would end up doubling like every 3 years, and you would double it 3 times. And so you go from a billion to 2 billion to 4 billion to 8 billion. So it makes sense for companies to convert their balance sheet from liabilities to assets, and the right way to do that is by embracing Bitcoin as a treasury reserve asset.
Sure. And I heard you mention on TV that, look, Apple and Google may be on the way. Do you feel 2021 is going to be the year of this trend that I think that you started? I've interviewed some medium and smaller businesses who are doing the same. What do you think? Do you think this is the year, given that, look, they're going to print more money? It's coming, right?
Yeah, I think you're going to see a lot more companies putting Bitcoin on their balance sheet. That's why we're doing this conference, because there's a lot of demand. I've got thousands of customers, and a lot of them are coming out of the woodwork asking, "How do you do this? Help us, work through the playbook, the regulatory issues, the due diligence issues, the acquisition, the custody, all these things. Make it easy for us." So it's really popular demand right now. I think that it wasn't on corporations' radars in 2020.
Mm-hmm.
In March, people were shaken, after we did it in August, people started noticing. I think that a lot of early movers, and people like Square, right, for example,
Yep.
they started moving, and Stone Ridge, a lot of private companies and I've talked to, they've already moved, and you can see that. But that, for the next tranche of public companies, I think you start to see them. They'll trickle out in 2021, and you'll see a bunch. But 2020, over the next 36 months, it'll be a batch, then a double, triple batch, then what they say, gradually, then suddenly,
Yeah.
then quite a lot, right? So I just think you're going to see this growing. I think you'll see high net worth individuals, institutions,
Yeah.
the fast money crowd. You know how it works. The fast money investors on Wall Street, they're going to front run the massive insurance companies, the massive publicly traded companies, but they're going to get in there a little bit earlier. And so I think you already see a lot of them, like Ruffin, like Guggenheim,
Yep.
like Skybridge. They're already moving, but you'll see a lot more of that. And then you'll see some good announcements, I think, in 2021 from publicly traded companies, and I think that that's going to wake up more people,
Sure.
and they're going to realize something, which is Bitcoin's a monetary network. It's the first thermodynamically sound monetary network, and why wouldn't you want to plug into that thing if it turns your balance sheet into an asset instead of a liability? It's like oxygen mask dropping out from the space above your seat in the airplane. I mean, more and more companies are going to actually start to grab that oxygen mask because it just makes a lot of sense.
Sure. And we've also heard from Miami's mayor that he's considering adding Bitcoin to the city's treasury. Do you see central banks as well as local governments, possibly federal governments around the world doing this?
Eventually, I mean, it starts with the visionaries, and then it's the early adopters and the high net worth and the family offices, and then it'll be the fast money and the hedge fund guys, and then the private companies, and then small, nimble, and committed public companies, and then more public companies than every public company. And I think that there's definitely going to be a place for agencies. You'll see agencies, you'll see nonprofits moving more aggressively, and eventually you'll see banks, central banks. You'll find that it'll be the central banks of the smaller
Yeah.
countries first, right? I mean, the ones that, if your currency is completely collapsed,
Right. Yeah.
right, then and you're thinking, should we go with the gold standard or the Bitcoin standard, or should we just use dollars or euros? It seems to me pretty clear that it makes sense to start to adopt a Bitcoin standard. I think that you should think of those as concentric layers, right? And so I think that the largest central banks will be last,
Mm.
but it seems an idea whose time has come. It's a force. It's coming. It's just going to keep building.
Now, I want to talk about the threats to Bitcoin, we were doing a SWOT analysis, the strengths, the weaknesses, and so forth. So, the threats that are out there, people have written off Bitcoin thousands of times, but it's still around. What do you think about the Tether situation as well as quantum computing? And if there's some very strict regulations, maybe coming from the United States, which is the largest capital economy or market, if you want to call it that?
There's definitely a lot of FUD in this industry. I've never seen so much FUD. I don't know. I don't know why. Like, for example, like people that buy $1 billion of Apple stock don't sit around saying, is Tether manipulating Apple stock price, or is the quantum computer going to destroy the Apple network? They're not there. There's a lot of people in the crypto industry, I think, that are very creative that are coming up with these things. With regard to Tether, it's completely irrelevant. I can't even imagine why anybody would take it seriously. The people that are buying Bitcoin are wiring hundreds of millions of dollars of cash into an exchange, and they're buying Bitcoin. 500 million of money goes to some place. They buy 500 million of Bitcoin. That's what's going on. There are some people that wire 200, some money into Tether, and they use Tether instead of cash because they want to move it between Singapore or Malta or some offshore exchange. But it's really third order. And what does it matter that someone uses Tether, right? I guess the theory is something like someone's created an extra $20 billion of Tether and
Right.
bought Bitcoin with it and it's not backed. But that means that they're short the Tether. And if someone ever calls it back, they're going to come up with $20 billion and they're totally out of luck. I don't believe that for a heartbeat. I think that that's silly. So I thought I got some email and it just felt like it was a scammer. I feel like all the Tether FUD is like some kind of scammer distributing something.
Well,
But there's no legitimate institutional buyer would even consider that. And I don't think they're even using Tether, right? In the US, they're not even using Tether to
sure.
buy Bitcoin. And most of the demand for Bitcoin is coming from the US. It's just US dollars getting wired into exchanges to buy. Maybe
Sure.
you could help me with the theory or why anybody even thinks the Tether thing is relevant.
Well, I think to your point that it's not fully backed. There's a certain investigation, but to your point, it is not. It's very minimal. It's not like the Guggenheim Fund is using Tether and Mass Mutual is using Tether and so forth, or
No, what's
Grayscale.
it? I mean,
Yeah.
even if Tether goes to zero, what's it got to do with Bitcoin? It's irrelevant.
Yeah.
It's like people that are buying Bitcoin are buying Bitcoin to hold for a decade and they're using either euros or dollars or some other fiat currency. If it ever went through Tether, it's transitional for a day. And
Sure.
maybe I would wire some Tether into an offshore exchange to buy it, but it's kind of like saying that like if I wire money from one bank to the other bank, it like sits there for 24 hours before it gets converted to Bitcoin. So it's completely irrelevant. It's kind of like the FUD of what if central banks create a digital currency? Well, the answer is that doesn't matter either. People aren't buying Bitcoin in lieu of central bank currency. They're not buying Bitcoin in lieu of Tether. And there's not any genie behind the wall that can conjure up $100 billion of Tether and buy Bitcoin and not pay it back. It just doesn't work that way.
Sure. And I
It's
think it's
not an
it's kind of like what Raoul Pal said. It's both a bug and a feature of the crypto community because if you're invested in Bitcoin, you're gonna want to see Bitcoin do well, right? And there's folks invested in Ethereum and others. So they maybe try to uh, put out a narrative out there to get people to be scared and sell their positions in Bitcoin and so forth. I think some of it is that, to your point of what's spreading.
Yeah. So
Oh,
I don't think anything. I think the Tether is kind of just irrelevant, random, irrational FUD.
what do
What's the
you?
next thing? Quantum computing.
Yeah,
Again, that's the same thing. The only people that pitch that are other altcoiners that want to somehow say that they're more quantum resistant.
sure.
You think anybody that owns Amazon stock is dumping the stock because of quantum fears? You think anybody owning Google you think Sergey Brin or is concerned about his Google stock because of quantum computers? I never met anybody on the planet outside of people in the altcoin space that talk about quantum attacks, and they talk about it all the time. And my conclusion is they're just desperately grasping at straws, looking for some way to criticize Bitcoin because they think that they've got a better quantum algorithm. But I think it's if someone invented a quantum computer, 99.99% of all the stuff on Earth is not in Bitcoin,
Yeah.
and it's all subject to quantum attack. I could pretty much create World War III and end Earth and life as you know it on the planet and take away anything from anybody if I have the mythical, all-powerful quantum computer,
Yeah.
right? And the first thing you're going to attack is probably like, wouldn't you just steal like $100 trillion worth of bonds and sovereign debt? Why would you bother to go after the stuff in Bitcoin if you really had the all-powerful computer? So it's kind of a silly thought experiment, but like you really think a malefactor is going to get their own quantum computer, no one's going to find out, and that no one's going to do anything about it? I really feel like it's dudes in their garage that are making stuff up to try to sell, the 6,437th crypto project and get funding for it. And so, no, I think that's just as silly as the Tether FUD. I think they're both just random FUD from altcoin projects.
And by the way, I agree with you. I'm just, I think there's folks who are listening who maybe now coming into Bitcoin, they're probably like, what about these things? As you're hearing them. So I'm glad that you're addressing them. And to your point, if there's quantum computing, the least thing we should be, or last thing we should be worried about is Bitcoin. There's just life itself and what could happen.
Bitcoin is the most secure network on earth and the most secure database. And it's got now what? $700 billion, $800 billion of monetary energy in it, some large amount, which means that it's got more money and more incentive to cure the problem sooner than anybody else if there should be a problem. But again, the real point is life on Earth as we know it would be threatened by the all-powerful mythical malefactor with a quantum computer. And the first thing they're going to attack is not going to be Bitcoin. Right. But I just don't, Dr. Evil is not getting a quantum computer. And if Dr. Evil gets it, then, your Bitcoin's going to be the least of your worries. Well, it's just, there are better things to focus your time on. It's just a very creative way to get distracted. And it'll probably cost you a lot of money because you have the world's first thermodynamically sound monetary network. There's no reason why it shouldn't go up by a factor of 100, and you're not going to invest in it or take advantage of it because of your fear that 1,000 whatever years from now, or 100 or 20 or 10, Dr. Evil will get a quantum computer. So I would respond with the classic Bitcoiner response: have fun staying poor.
So then the other threat, so to speak, what if the government decides, okay, Bitcoin's too much of a threat to us and our CBDCs and the IMF and Christine Lagarde and all these folks come together? What if they come out with some strict regulations? I know that's going to be impossible with Bitcoin being a global monetary network, but I'm curious what your thoughts are there.
I think that over the next decade, the most logical challenge for people in the Bitcoin community is just regulatory FUD. You'll just see fear, uncertainty, and doubt about, well, what if a regulator does something that's bad? I don't know what it is, but what if they do it? Just like, what if Dr. Evil invents a quantum computer? They're just I'm speculating that something might happen. I don't know what it is, but what if something that I don't know will be really bad that will cause a problem? And that's why we should do nothing, or that's why you should give me money to invest in the 6,437th different project. And I think the answer is the regulators will regulate it. The IRS will make you pay tax on it. They have. It's property. You pay property tax. If you want to use it as currency, you can't, because there's a capital gain tax when you transfer it. So it is regulated. The OCC will have an opinion. The SEC will have an opinion. The Treasury will have an opinion. There are KYC regulations. Like, for example, it might take you 4 weeks to get an account with a regulated exchange. There'll be AML regulations. I think there'll be regulations everywhere in the world, but the writing is on the wall. It's most likely that what we're going to see is it can be regulated as property. And that means that if you had $100,000 of cash in the bank and you wanted to wire it to a random phone number without saying or knowing who it is, probably the bank would balk. And if you have 100,000 worth of Bitcoin and you want to wire it to a random place and it's in a regulated custodian, they'll probably get around to saying the same rules that apply to AML rules that apply to cash or to gold or to a share of Apple stock will probably start to apply to Bitcoin. There'll be some evolution of that. Maybe they'll be more flexible, maybe they won't. But at the end of the day, if your greatest fear is it gets regulated the same way other property is regulated, it's not going to impair Bitcoin as a store of value. And in fact, Bitcoin is the best store of value on earth. It's a better store of value than stocks. You can't wire $10 million of stocks to a private wallet in Africa right now, but that doesn't mean that Amazon is worthless, right? Yeah. It's going to be a better store of value than real estate. It's going to be a better store of value than bonds. You can't send $1 billion worth of sovereign debt to a private wallet, but that doesn't mean that the debt isn't there, right? So if Bitcoin is better store of value than bonds, stocks, real estate, gold, silver, and derivatives, and every flavor of cash, then there's no reason why it shouldn't absorb $100 trillion of monetary energy, regardless of what if you apply all the regulations to it that you applied to all those things I just named.
Right.
For example, if you had a $10 million ranch in California, you probably couldn't wire that to your friend in Africa to a private wallet without permission either, right?
Right.
I mean, the point, but does that make it worthless?
No. Yeah.
Yeah, so I think that the regulatory FUD, again, is another example of it can be a debilitating, paralytic type reaction where people paralyze themselves. They prevent themselves from doing something obvious and rational because they're speculating about some parade of horribles that may or may not take place that are incoherent. They can't quite articulate yet, but they're sure they're afraid of something that they haven't quite been able to articulate. But let's just say, in the extreme case, if Bitcoin is regulated the same way that $10,000 of cash is in the US, it's still going to be 1,000 times better than holding the cash.
Right.
What are you going to do, right? You're going to convert your Bitcoin back into cash, right? Like you can sell your Bitcoin right now. What are you going to convert it into that's less regulated?
Yep.
Nothing, right?
Yeah.
So at the end of the day, I think there'll be know your customer this, there'll be anti-money laundering that, there'll be some tax regulations, there'll be some back and forth over what you can do, there'll be concerns about privacy. That's why I look at Bitcoin and I think it's pretty clear if the use case is store of value, well, like 7.8 billion people on Earth need a store of value, and then probably the value of that is 100 to 300 trillion dollars, right? That's enough. That's good. If the use case is currency, replace the dollar and the euro, that seems like that's just intentionally inflammatory. We don't need to replace the euro and the dollar. The bankers are going to be upset about replacing the euro and the dollar. I don't think it's going to happen, and not in the next decade or 2 decades, so we don't need to get wrapped around the axle on that. And if the use case is medium of exchange and payment, like we don't really need to pay for a pizza with it. We don't need to pay for a Starbucks coffee with it. I mean, that's already solved by Alibaba and PayPal and Square and Apple Pay and Amazon and Google Pay. And it's, they can be regulated, and Visa and MasterCard. So you can leave Visa and MasterCard alone. You can leave the dollar and the euro alone. We can agree to pay taxes.
Yeah.
We can, we can not thumb our nose at regulators. And then we can focus upon the critical matter at hand, which is everybody on Earth needs a store of value. It's not illegal to pursue a store of value. If you have $100,000 in cash and you're looking at it being debased at 15% a year because the expansion of the M2 money supply and fractional banking, then your choice is, are you going to buy bonds? Are you going to buy real estate? Are you going to buy Apple stock? Are you going to buy the NASDAQ index? Are you going to buy the Dow? Are you going to buy any index, the Russell 2000? Are you going to go buy gold? You're going to go buy silver? Or are you going to go buy Bitcoin? That's your choice. Make a choice.
Sure.
If Bitcoin is an index, it becomes a thermodynamically sound monetary index, and you compared that to the Dow, the S&P, and the NASDAQ, it would be a better index.
Yeah.
It's a deflationary index, right?
Yep.
It doesn't necessarily replace currency with privacy, with censorship resistance. Don't get me wrong, right? Before I trigger everybody, I'm in favor of all those things. But you don't have to achieve all those things in order to have a valuable, a store of value crypto asset network. If Bitcoin is simply a store of value and is better than gold,
right,
there's no reason why it shouldn't go to $100 trillion in value. And that's what, $5 million a coin. And so I think that we've got a very simple, addressable market, a powerful one. It's 100 times bigger than Google or Facebook or Amazon or Apple. It's a big thing. I think sometimes my issue with the FUD is when you get all wrapped around the axle on, oh, it's quantum attacks, and oh my God, Tether's being manipulated, or what about regulators? You focus on that, you miss the big picture. Guys, this is a big tech network, which is 100 times bigger than every other big tech network. It's only going to happen once in your life. This is it. You will never get a better chance actually to get a leg up in the world than to be early to the world's first digital monetary network. And you're going to miss this opportunity because you're worrying and freaking out over all these third order, fourth order, fifth order hypothetical, FUD concerns. And I think they're just enormously distracting and expensive, and people should focus upon the first order issue here.
Sure. And I'm sure, some of it is the people who are anti-Bitcoin who put a lot of those things out. Those who also possibly look at some market and the game of shorts and longs and shake people out and create different emotions and a psychological Wall Street cheat sheet, so to speak. So I'm sure some of that is part of it. So I'm curious, as far as I know this is a cliche question, price prediction for this year and maybe by the time the next halving, anything you can share on that front?
I think people in the crypto community are too fixated upon short-term price movement. Like they're studying which way it's going to go every 2 days or every week or every month. And, I don't subscribe to that. I don't really think anybody knows. If you told me it was going to go one direction or the other in the next month, it wouldn't change any decision. If you told me 3 months, it wouldn't change a decision. If you told me a year, it wouldn't change my decision. I think that the rational way to think about this is to look out over, if you want to be near term and conventional investor, 4 years, a 200-week moving average. And if you want to be a bit more fundamental investor, then you look out a decade to 2 decades. So when I think about it, I think, what happens in a decade? What happens in 100 years? Between 10 and 100 years, I run all my models, I work backwards, and then I say, what do I think in 4 years? But I never think about 4 weeks, 4 days, 4 hours, even 4 months, right? You could be wrong for 4 months, but if you've worked out the fundamental physics of the thing, and you're looking at the bigger issues, then you'll probably be right over 4 years. And so what is my prediction? My prediction is over time it will go up in price. and I think it'll go up in price because I expect it to demonetize gold and then demonetize negative yielding sovereign debt, then demonetizing low yielding debt, and it'll demonetize other stores of value like bond indexes, stock indexes, Russell 2000 indexes, mutual funds, etc. And obviously, that's 100x more than it is right now.
Yeah.
As for how fast, it was going up at 1,500% annualized for a month. Okay, so people are freaked out that it traces back.
Right.
Oh, well, when it traced back, when it crashed, it was only going up 1,000% annualized.
Yeah.
Okay, if it went up 100% annualized, it would destroy every other alternative, right? So the point really is whether it's 1,500% or 1,000% or 100% or 200%, that's going to be a really big deal for people staring at the chart over 1, 2, 4, 8 week timeframes. But the only decision you can make, which is a mistake, right, is to be short Bitcoin.
Yeah.
Right? Like to sell it and not own it when it goes up again is the one mistake. Right? I mean, well, in fact, so if you get up every day and you ask this question, well, should I sell it today?
Okay. Yeah.
Well, you're going to ask the question 365 days in a row, and one day you'll make a mistake. If you get up every day and you don't ask the question, are you committed? If you're committed, then why don't you just wait a year and then you can look and see what happened, and maybe it went up and maybe it went down. And after 4 years, if it's down, it's probably not working. After 4 years, there's something wrong with the thesis. After 1 year, I've actually seen periods where, like with Apple stock, it was clear Apple was going to crush everybody. There's like a 1 year period when you could have bought it and it would be down for the year. Over the past 10 years or 15 years, there was one time you might have managed to. There was never a 2 year period or a 3 year period. And over a 4 year period, you could have bought Apple, Amazon, Facebook, Google, Microsoft over 4 years, anytime during this mobile wave era. It's impossible. Bitcoin is going faster than they're going. And I think the people that are real critics, right, they looked at the blow off top in 2007 and they were using that as a criticism. But even then, right, over 4 years, it turns out that it would have been a mistake to have sold ever.
So
no matter when you bought.
I've heard you say you're never going to sell your Bitcoin. So is there any situation that you would find yourself in that you're like, you know what, I'll sell some, or are you like planning to leave it as an inheritance for your family, things like that?
So let me explain on that. Why would you ever sell an asset in an inflationary environment if it's being priced in fiat currency, which is collapsing in value? For example, if I told you that the dollar is going to be printed and it's going to be debased 10% a year, and if you owned a house and it was a desirable house and you wanted to live there the rest of your life, why would you ever sell the house? Because it's going up in price 10% a year. And if the interest rate is 3%, you would just hold the house the rest of your life and just refinance the house. And when you need more money, you would borrow against the house because the house is going up. If you owned a football team and I printed 10% more money, the value of the football team would go up. You're not going to sell the football team. You're going to hold it. And if you need money, you're going to borrow against it. Selling a good asset normally is always a mistake. But Warren Buffett's never sold his assets. He held them forever. John Malone held his assets. Pretty much every billionaire that you know of for the past 100 years, they got that way by never selling anything, right? So the trick is you have to find an asset which is not going to be impaired, right? The reason to sell something is not because you need money. The reason to sell something is because the asset is impaired. And by impaired, I mean like sell the football team because no one will ever watch football ever again. Or sell the ranch in California because that they're going to pass a 5% a year property tax on California and you need to leave California and no one's going to want to ever go to that ranch. And sell it because it's impaired. If it's not impaired, then then as fiat gets printed, the asset is going to go up in value if it's a high quality asset. And if you were to sell it, you would get hit with a capital gains tax, either long-term or short-term, right?
Yep.
Capital gains tax is likely to go up next year, right? I mean, it's 25 to 50%, depending on where you're living.
Sure.
So, so you sell something, you're going to pay half of it to the federal government or the state government. You keep the other half, and then you're going to lose the appreciation on the asset. If Bitcoin was going up 20% a year, right, and you sold it, you would lose a 20% return every year for a decade, right? That means selling $1 million of Bitcoin will cost you $10 million in 10 years. So you lose the capital appreciation, you pay the tax,
right.
You get $500,000 to spend. Why wouldn't you just borrow $500,000?
So you're saying borrow against your Bitcoin holdings is in a way to earn? Okay, so like kind of like BlockFi. I use BlockFi, lend and earn interest on my Bitcoin and other cryptos. in that type of
let me
scenario.
make a big point, right?
Yeah.
If the asset is appreciating faster in value than the rate at which your expenses are going up yearly, you can borrow against it forever and your debt to equity ratio will fall. You see, like if I had $1 million of Bitcoin, I borrowed 100,000 against it, my debt to equity ratio would be 10%. I would pay, maybe I pay 5% interest. Maybe I pay obscene interest, 10% interest. It cost me 110,000 instead of 100,000. Okay, well, Bitcoin's going up. Fill in the number. What do you want to fill in? 20%? It's going up 200%, right? If it was going up 100%, by the way, your 1 million becomes 2 million. Next year you have 2 million. You borrow another 100,000. Now you've got $200,000 in debt outstanding. You've got, 30,000 in accumulated interest. You've got $230,000 against $2 million. Your debt to equity ratio is no worse. The next year it doubles again. And
Sure.
now you got 4 million against 300,000 in debt. Your debt to equity ratio falls. The next year it doubles again. Now you got 500,000 in debt against 8 million. Your debt to equity ratio falls to 6%. Your debt to equity ratio will fall exponentially to zero, right? I mean, well, not to zero, but to a low number. So if you actually wanted to accumulate wealth, the number one thing you got to do is you have to acquire high quality assets that will not be impaired.
Sure.
The number two thing you have to do is you have to have a relationship with banks that will advance you money, cash, fiat, euros, dollars that you have to spend against those assets. That's the second thing. But the first thing, well, now let's come back to Bitcoin. Well, what's the highest quality asset on Earth? What's the best property you could possibly have? A city block in Manhattan? Not anymore.
Right.
It used to be a city block in Manhattan when everybody in the world went to New York City, but you can't move a city block. What if I gave you all of Park Avenue in cyberspace, and I told you that 1 billion people are going to live there one day, and they'll live there for 1,000 years? What if 10 billion people want to live in cyberspace for 1,000 years, and you could actually own 1% of the city, or 0.1% of the city? Why would you ever sell it?
Right.
Right. I mean, the point is, they're not making any more of it. Bitcoin is Manhattan in cyberspace. It's 21 million city blocks. You can buy a block. Okay, it's better than buying all of LA because you can't move LA out of California. You can't move it out of the US. It's better than buying 10% of Apple because Apple might print twice as many shares and then you only have 5% of Apple. It's better than owning a bunch of gold because gold miners are going to produce twice as much gold.
Yep.
Okay, it's better than owning bonds and cash. So tell me, what on earth is better than owning the Jets or a football team? People might not be watching football in 1,000 years.
Right.
By the way, there's nobody in the stands this year watching football, right?
Yep.
So find an asset. It's probably better than owning the Mona Lisa or owning a Michelangelo or something like that. I mean, although those are scarce.
Right, it's scarce.
You can't be guaranteed that everybody's going to want to have classical art. But will everybody want money? Monetary energy? Like, monetary energy is the ultimate property. I have pure, encrypted, tokenized monetary energy, and I can own 1/21 millionth of all the monetary energy there's ever going to be for people on the monetary network, which is the dominant monetary network. So you buy fill in the number, you buy it and it's going up 100% a year, right?
Mm-hmm.
You have $1 million and you sell it, so you have $500,000 you can spend, or you don't sell it and it goes to 2 million, 4 million, 8 million, 16 million, 32 million, 64 million, 128 million, 256 million, 512 million, a billion, right? Okay, so a millionaire becomes a billionaire by not selling over 10 years. And let's say you wanted to spend 500,000 a year, borrow 500,000 a year, and after 10 years, you will owe 5 million out of a billion. Your debt to equity, including interest, is less than 1%. 1% of your Bitcoin would be debt. Now you tell me, You think it's a wise thing to sell the $1 million? It's going to cost you $999 million to sell the million. You think it's less risky? I mean, and I think the answer is, I think people, they're not realizing that they can borrow against it. They should go and the single most important thing you can do is develop relationships with bankers that will loan you money against your assets. And then in terms of, Tony, like what would I borrow against? Well, first you borrow against fixed assets, like borrow against your house, because it's not mark to market. It's not going to trade down by 50% in a morning, right? Mm-hmm. So I joke, mortgage your house, buy Bitcoin. But the truth is, before I sold Bitcoin, I would mortgage my house. Sure. Because I can get a 30-year mortgage with a fixed interest rate, and the house is probably going to go up in value over the 30 years because the banker's going to print more money. So why don't you borrow against a fixed asset? If I can't borrow against a house, I borrow against my car. I started MicroStrategy. I took a furniture loan. I borrowed money for furniture. I didn't buy the furniture, by the way. It was just an excuse to get an unsecured loan. But you borrow against something like that is not going to trade down rapidly. Like I am not, for example, I would not tell anybody go buy Bitcoin on 10-to-1 margin. Like that's stupid. Like, don't go buy $1 million of Bitcoin with 100,000 of collateral, because if it trades down 10%, you're going to get forced liquidated and wiped out and lose your 100,000. I would say a better idea would be buy 100,000 of Bitcoin with 100,000 in collateral. And when it goes up by a factor of 3 or 4, you can borrow 50,000 against it. Your debt to equity ratio would be 20%. If it doubles the next year, your debt to equity ratio will be 10%. If it doubles again, your debt to equity ratio will be 5%. If it doesn't go up by a factor of 100%, if it goes up by 10%, as long as it's appreciating faster than your rate of interest, and interest rates are low, it's kind of a non-issue. And
sure.
And you have to adjust your expenditures, right, to keep them in line. So common sense is, keep your debt to equity ratio at 10, 20, 30% of your assets, and then hold on to high quality assets. There is no one that ever got rich, in my opinion, nearly no one, that didn't buy an asset and let it appreciate tax-free over time. It's the taxes that kill you, right? The capital gain tax, the income tax, etc. And you really, when you borrow against assets, you're actually living on liability. So instead of making $500,000 a year and then paying $250,000 a year in taxes, wouldn't it be a lot smarter to borrow $250,000 a year and let the money appreciate tax-free for the next 20 years of your life? That way you pay no tax, and you've still got an asset that's working for you. So you win both ways. You just have to manage your debt exposure, and you have to be intelligent about, are you marking the asset to market? And if you're marking it to market, you need to be very conservative about your debt to equity ratio, as opposed to, are you taking an asset against a loan against a fixed asset, which isn't going to be marked to market. It's just a term loan.
So Michael, I know you have a few more minutes because you mentioned you had to hop off at a certain time. 2 quick questions before we wrap it up.
Yeah.
Is MicroStrategy planning to get into any Bitcoin mining? We're seeing a Bitcoin mining movement in the United States. Anything there that you're planning to do?
I think it's important that the Bitcoin mining industry grow everywhere in the world, and especially in the U.S. I'm a big fan of that, and I like it. I think that the people that should be in Bitcoin mining, they need to have proprietary assets, either in energy. You need to have access to cheap energy over a long time, or they need to have a capital structure optimized. If you're a publicly traded company that's got shareholders that want to be in the mining business, like say Marathon, it makes sense for them because that's what they are, right? Their shareholders signed up for that, and they've got a capital structure for that. So if you have a public company that's optimized for that, that's good. And then if you have access to, Intel ought to get into it, right? If you can manufacture semiconductors, and you can, or if you've got data centers like Amazon,
Right.
right? The ideal thing would be an Intel or an Amazon, someone that's actually got serious data center structures because they have strategic assets there. MicroStrategy really isn't strategically in the data center business, the chip business, or the energy business. So it's not really a good fit for us, but it would be a good fit for one of those types of companies.
Got it. Final question. It's rapid fire. Favorite food?
Steak.
Favorite musician or band?
Sting.
Sting. Nice. Favorite movie?
The Godfather.
Nice. What's your favorite book?
The Moon is a Harsh Mistress.
And when you're not at MicroStrategy or looking at Bitcoin, what are you doing for fun as a hobby?
I'm floating somewhere in the watery part of the world.
Very cool. Michael, I've learned so much today. It's a pleasure to chatting with you. Thank you so much for joining us.
Thanks for having me, Tony. I appreciate it.